Welcome to our US Briefing Show, where today we're diving into some lively economic and political updates. First up, the US and its trade partners are in a bit of a tug-of-war as tariffs are flying left and right. Countries like the EU, UK, Japan, and China are scrambling to negotiate deals before the August deadline, but tensions are high with China retaliating with over 100% tariffs. It's a global trade standoff that's definitely stirring the pot. Next, inflation is making headlines as a key measure shows prices climbing, partly thanks to Trump's tariffs. The Federal Reserve's preferred inflation gauge rose to 2.6% in June, nudging above their target, while the economy still grew at a healthy 3%. But the question remains, are these price hikes temporary or here to stay? Stay tuned as we watch how this impacts your wallet. Finally, South Korea's stock market is shining bright this year, jumping 35%. Thanks to reforms inspired by Japan, the market is shaking off past doubts about the Korea discount, and investors are feeling optimistic. However, the road ahead still has some bumps, especially with the dominance of big conglomerates and the need for continued reforms. It's an exciting time for Korea's economy. Please continue to watch for more detailed insights. Deutsche Welle reports the tumultuous landscape of global trade as the US, under President Donald Trump, enforces a series of escalating tariffs aimed at reshaping international commerce. Trump's bold declaration of a 10% baseline tariff on all imports, coupled with reciprocal tariffs on about 60 trade partners, has prompted a frantic scramble among nations to negotiate new trade deals before the August 1 deadline. Notable agreements include a tentative deal with the European Union, which will impose a 15% tariff on EU goods, and deals with the UK, Japan, and South Korea, each with specific terms that reflect their unique economic ties with the US. While some countries like the EU and UK have managed to secure favorable terms, others such as Vietnam and Pakistan face higher tariffs or transitional arrangements, and China's retaliatory tariffs and restrictions on rare earth minerals exemplify the ongoing trade tensions. Meanwhile, nations like Brazil, India, Canada, and Mexico are caught in Trump's tariff crosshairs, either threatened with steep levies or engaged in tense negotiations, illustrating the complex and often unpredictable nature of this aggressive trade strategy. The Associated Press highlights the economic repercussions of Trump's tariff policies, notably the rising inflation that signals the tangible impact of increased import costs on American consumers. The Federal Reserve's preferred inflation gauge climbed to 2.6% in June, surpassing its 2% target and reflecting the inflationary pressure from tariffs on heavily imported goods such as appliances and furniture. Despite the Federal Reserve holding interest rates steady at 4.3%, the inflation uptick complicates the outlook for monetary policy, with Chair Jerome Powell indicating it may take months to ascertain whether tariffs have caused only a temporary price increase or a more persistent inflationary trend. Concurrently, the U.S. economy demonstrated resilience with a 3% quarterly growth rate, yet underlying signs of weakness, like sluggish consumer spending, raise concerns about sustained growth. The inflation surge underscores the broader economic challenges posed by the trade war, as rising prices threaten to undermine consumer purchasing power and complicate policymakers' efforts to balance growth and inflation control. South China Morning Post explores South Korea's surprising stock market rally amidst global uncertainties, with the Kospi index soaring 35% this year to become Asia's top performer. This remarkable rebound follows political upheaval, the threat of U.S. tariffs, and a long-standing undervaluation rooted in corporate governance issues within the chaebol conglomerates. Recent reforms, including new laws increasing management accountability and limiting voting rights of major shareholders, signal a concerted effort to address the Korea discount, the persistent undervaluation caused by poor governance and cross-shareholdings. These reforms, coupled with an improved political climate after President Lee Jae-myung's election victory, have attracted investor optimism, with both domestic retail investors and foreign institutions turning increasingly bullish. However, experts caution that the rally may be premature, as entrenched corporate structures and economic risks remain. The reforms are still in their infancy, and whether they will effectively transform corporate transparency and valuation remains to be seen. Nonetheless, South Korea's bold steps to confront its governance issues mark a significant shift, signaling potential for a more sustainable and valued stock market in the future. The Associated Press reports that the Trump administration has taken a significant step to suppress the burgeoning offshore wind industry in the United States by canceling plans to develop new offshore wind projects. Once, over 3.5 million acres had been designated as prime wind energy zones in federal waters, promising a future of renewable energy growth along the coasts of Texas, Louisiana, Maine, New York, California, Oregon, and in the Central Atlantic. However, in a move aligning with Trump's broader energy policies, all these designated areas are now rescinded, and the government has halted setting aside large tracts for wind development. The Bureau of Ocean Energy Management justified this decision by citing an order from the Interior Secretary to end any preferential treatment toward wind and solar facilities, branding them as unreliable and foreign-controlled. This reversal reflects a clear hostility toward renewable energy, with the Trump administration previously issuing executive orders that temporarily halted offshore wind lease sales and paused approvals for wind projects, relying on false claims about wind power's reliability and global use. Despite the setback, the first commercial offshore wind farm in the U.S., South Fork near Montauk Point, New York, opened last year, symbolizing the industry's potential that the current administration seeks to stifle. Meanwhile, Nikkei Asia reveals that China has halted approval for outbound investments to the U.S., marking a sharp escalation in the trade conflict between the two economic giants. Since April, Chinese local governments and the National Development and Reform Commission have ceased processing applications for investments in the U.S., especially those exceeding $300 million, amid ongoing negotiations and tariffs imposed by Trump. This move is part of a broader effort by Beijing to restrict capital outflows and protect sensitive sectors like weapons manufacturing, amid a tense trade environment intensified by tariffs reaching up to 145%. Chinese companies, which previously invested heavily in the U.S., with peak investments in 2016, are now pulling back, with recent figures showing a decline to just $6.91 billion in 2023. Although these restrictions signal heightened tensions, analysts suggest they are more symbolic than impactful on overall foreign investment, which has already been at decade lows. The trade war, marked by tariffs and export controls, continues to reshape global supply chains, prompting Chinese firms to consider shifting production onshore despite political hostility and regulatory hurdles. South China Morning Post details how Trump's trade policies have recently caused copper prices in the U.S. to plummet by about 20%, following the signing of an executive order imposing a 50% tariff on certain copper imports. Unlike earlier threats that aimed to target all copper products, the final tariffs are limited to semi-finished copper goods like pipes and wires, excluding refined copper or cathodes, which are critical for U.S. manufacturing. Trump's move aims to bolster domestic copper production, reduce reliance on foreign sources, particularly China, which dominates global copper smelting, and support national security. The tariffs are part of a broader strategy to revive U.S. critical mineral industries, utilizing the Defense Production Act to promote domestic refining and scrap sales. While market analysts see these tariffs as a short-term disturbance unlikely to alter long-term supply and demand fundamentals, the immediate impact has been a significant drop in copper futures prices, reflecting market expectations of reduced imports and increased domestic production. This move underscores the Trump administration's focus on reshoring vital industries amid ongoing trade tensions, with global markets closely watching the ripple effects. CNN reports on Victoria Kios, a 71-year-old American woman who found her spiritual and personal fulfillment in Bali after a life of conventional success in the United States. Once a government official and real estate professional living comfortably in Phoenix, she became disillusioned with the materialism and self-centeredness she observed in American culture. Her journey of self-discovery took her across India, Nepal, and Thailand, where she immersed herself in spiritual practices, eventually leading her to Bali in 2019. Captivated by the island's mystical energy, rich traditions, and welcoming local community, Victoria decided to settle there in 2022, embracing a slower pace of life and a more meaningful existence rooted in local culture and spirituality. She appreciates Bali's consistent weather, lower living costs, and the sense of community, especially the close-knit family ties and ceremonial life that contrast sharply with her previous life in the U.S. Despite some challenges, such as navigating local real estate and healthcare, she feels more connected to her surroundings and the Balinese people, whom she admires for their family orientation and spiritual ceremonies. Victoria's story exemplifies a desire among many Americans to seek authenticity and peace away from the hustle of Western materialism, choosing Bali as a sanctuary for reflection and renewal, with plans to make her stay permanent. The Associated Press details the recent trends in the U.S. labor market, highlighting that jobless benefit claims increased slightly last week to 218,000, marking the first rise in 7 weeks but still indicating a resilient labor market. Despite ongoing economic uncertainties, especially related to trade policies and tariffs under President Trump's administration, employers continue to retain staff, with June's employment data showing an unexpected addition of 147,000 jobs and a slight decrease in the unemployment rate to 4.1%. However, signs of strain are emerging. Job vacancies declined from 7.7 million to 7.4 million in June, and the number of workers quitting their jobs, the hallmark of confidence, hit its lowest level since December. The extension of tariffs and proposed taxes on imports threaten to dampen economic growth, potentially leading to reduced hiring and increased layoffs. Major corporations, including Procter & Gamble, Microsoft, and Disney, have announced layoffs, emphasizing the ongoing uncertainty. The labor market remains strong overall, but rising tensions from trade policies could slow momentum and impact future employment prospects, with the total unemployment benefits remaining steady at around 1.95 million Americans. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.